Hey there, future millionaires. Welcome to Profit. Today we are going over basic moving averages and how they're used in trading. Let's start with a couple of terms. Fundamental analysis, or FA, as you'll see it abbreviated, and technical analysis, or TA. Both of these look at different sets of data in order to try to gain an edge on the market. FA is the process of taking news and current events, such as Federal Reserve moves, rain in China that affected miners up until last year when they moved, Elon Musk tweeting this or that, and that is used to try to forecast how the market will respond to that news. You'll see this a lot in the commodity markets. A drought hits Iowa and the price of corn will go up. War in the Middle East, oil price spikes. TA, on the other hand, is the process of analyzing the price movements on charts and trying to predict the future based on how it has responded in the past. TA takes zero fundamental news into account. Everything you need to know is right there on the chart. The use of moving averages is one of the bedrocks of TA. Moving average is pretty much how it sounds. It's a price average over a set period of time. Moving averages help traders determine the trend in the market. The longer the moving average, the more history it'll tell you, while shorter ones will reflect more recent price action. It's important to note that moving averages are backwards-looking indicators. They only try to tell you the current trend. It's not a predictor of future price. There are a couple different kinds of moving averages. The most basic is called a simple moving average, or SMA. As an example, if I wanted a 10-day simple moving average, I'd look up the closing prices the past 10 days, add them up, and divide by 10 to get the average. Another type of moving average is the exponential moving average, or the EMA. It's similar to the SMA in that it averages the inputted date range, but the EMA gives more weight to the more recent prices, making it a little bit more relevant in the short term. The process of calculating an EMA is more complicated than the SMA and has variables that can be changed. The main difference between the two indicators is the sensitivity that they place on price changes. The EMA gives more weight to recent price action, while the SMA weighs all the days equally. One of the most simple and powerful tools in technical analysis is the MACD, which stands for Moving Average, Convergence, Divergence. This is a process where you pair two moving averages, one longer term and one shorter term. When the shorter term value and the longer term value come together on a chart, that's called convergence. When either of the indicators start to move away from the other, that's divergence. In simplest terms, when the shorter term indicator crosses above the longer term, that indicates a bullish scenario. It's telling you that short-term action is on the uptick. When the shorter term crosses beneath your longer term, that indicates a bearish scenario. Short-term action is on the decline. These indicators help you to know if you're on the correct trending side of the movement or if you're on the incorrect against the trend side. So if you're expecting the price to increase, it's important as confirmation to see the short-term indicator run up and away from the longer term. If you're expecting the price to decline, you're looking for the shorter term indicator to run down and away from the longer term as confirmation. You'll see a lot of people mention the longer term moving averages as important support and resistance levels, and they're definitely good things to keep an eye on. The 50-day, 100-day, 200-day, 20-week, they're all used as confirmation quite a bit, and always good to take a look at to better interpret the overall story the market is telling you. So play around with the different time frames with your moving averages and see which ones make the most sense to you and would be something you could trade. Remember, always extensively paper trade a new system before jumping in with real money. There's no rush. The markets aren't going anywhere. Okay, that's a wrap for today. Stay safe out there. This is the Prophet signing off.